Hello traders, Damien here, and today is Friday, July 12th, and want to do the post-session review today of today's trades. Today ended up being a break-even day, which is not bad. It is good. We unfortunately got taken out by a few points here, and we would have had some really nice gains, but that's not the point. The point is being in line with the trade plan and in line with the strength of the market. So let's go over the two trades that I took. I'm going to go over some of the harmonics involved and some of the areas of interest and how I navigated through the price chart today. Okay, so when we got to the market today here, this was more or less the overnight trading. We saw that it was very range bound, and we saw that there were consistent buyers in and around these price levels, and there were consistent sellers in and around these price levels too. Okay, one of the things that immediately jumped out at me were that the sellers were very invested in trying to stop price from climbing, and that they were doing a fairly nice job of absorbing overall, and that imbalance may favor the selling side. However, price did produce a new structure high here at this level. So we got a higher closing on all of these levels, and that is something that shouldn't have happened. It's also a very big indication that the market is telling me I can move higher, and I will. Okay, so that is a new structure high. We would expect a higher low and then another new structure high from that. Okay, now as price came in here, this is still pre-market. Okay, and as the market opened, it very started dancing around between these areas, and we saw that the sellers were getting more and more eager to get in, but the buyers were also more and more able to reabsorb them and not allow them to achieve anything. And that imbalance that slightly favored the sellers to begin with, all of a sudden got absorbed and price moved up into new highs. Okay, so that was a reconfirmation that I can move higher and I will to I just did. Okay, on very good momentum on the sellers not being able or willing to defend any of these previous levels before. Okay, so now I was on the side that I wanted to take a long. Okay, and as price came back here, I wanted to get in where I drew this rectangle, because that's where the buyer showed willing to what, to buy at those price levels. Unfortunately, price did not get there. Okay, and I ended up not being able to take that trade. So I watched price climb very nicely up without offering many corrections to begin with, until price got into this area and came down. So before I move on to the actual trades, I want to draw the harmonics so you guys can see them. Okay, so we have a clear low, clear high, right, that we can project forward with a proper correction as price came down. This is around the 618. Let's see the 618 here. So we see that that is definitely a proper correction. Clear low, clear high. That is a harmonic move that we can project forward from its proper point. As we can see, the price fell a little short of that, but pretty much in the neighborhood, came in and produced a nice correction. Okay, now that is something that we can again project forward. So we can paste and copy this line and bring it forward. We know that as price got to this area, it wanted to found some exhaustion, and price tried to correct again, only extended pass. Now, is there another harmonic here that we could have used to say, okay, our area of interest to get short, if we were looking for shorts for whatever reason, was slightly higher? Remember, we talked about clear highs, clear lows, and proper corrections. Okay, we have a clear low, clear high, proper correction, higher low, new structure high, proper correction to this swing, but it's also a proper correction to this clear low, clear high, right? Reaching the 38% qualifies right here. Okay, so we have another, okay, here that we can project forward. From where? From here. That's the appropriate place, right? And surprise, surprise, look what happens. Okay, so harmonics are very clear and accurate way to help us understand where exhaustion is likely to set in, where profit targets should go, and where price may form an ability to correct because of that harmonic exhaustion. When we tie that into with ratios, we get nice confluence. Okay, but again, we're going to start building on these things. I just want to keep mentioning them every day so we can get accustomed to looking at things from a certain point of view that are going to greatly benefit you in your decision making and in your analysis moving forward. Okay, so now as price started coming here and correcting, okay, we start seeing some acceleration in price. We start seeing price move a little more sense of purpose to the downside here. Again, we're not here to talk ourselves out of trade or to interpret strength and weakness from a standpoint of not taking a trade, but we are here to understand that this move coming down, as we get deeper into the understanding of price action and bar by bar and absorption and stuff like that, doesn't necessarily mean that there is a whole lot of selling going on here. We have to understand that the buyers may not need to defend those areas because they already did the work necessary and want to buy a better pricing, which creates what? Ease of price movement that looks like strength, but it's just an empty correction. Okay, so as price came here to this area here, I wanted to participate. It was a little earlier than I wanted to, but the market had not been correcting. I missed my entry here, so I got a little aggressive here and wanted to jump in where I saw some buying before, some buying that actually made price move. I didn't see a whole lot of anything here on the selling side, and I did see the buyers coming in with these smaller candles. Those are buyers coming in. More on that later. But I took the rotation, and I got to a break even at the test of the area where the sellers came in, because as we can see here, the buyers did try to come in, and the sellers very quickly absorbed that. So when the sellers got in there, and I saw that the sellers were very active here on this way up, so it was more of a correction than an impulse move, because the sellers were reabsorbing all the money that was coming on the buying side. That was concerning. So when I saw the rotation, I saw the buyers wanting to come in and then getting absorbed, I protected my trade a little early. I locked in 3 points. I ended up with a 3-point gain there, which I consider a break even. Okay, then after that, the market came down, and I entered again on a SOS3 signal. More on that again as the weeks progress here. But we had an ABCD pattern completion, okay, which is this right here, into an area of interest right here. Okay, this is an SOS3 signal, very strong signal to the upside. Okay, so I got long here, but there's another thing here that's happening from a harmonic standpoint that had me willing to re-enter again, or to enter another position lower, and that is that there is a bat pattern happening here. If we take our ratios, okay, and we come down here, we see the price came down to the 50%. Okay, this is a properly formatted anchor leg, right? It's off of a properly formatted main swing, so it is a good anchor leg. Okay, and we have an XA, A to B, and then we have 78.6% retracement here. Might have gone a little there, but we have a 78.6 here between the 78 and the 618. That is a qualifying C to D, B to C leg, and then the C to D leg terminates down here as we need the 88%. Let me open it up here. Levels 88, turn on. Okay, and then we will draw a extension, Fibonacci extension. We'll make the same mistake as yesterday. Okay, and then we will grab the A to B leg, and we look for the 161 of this leg right here. So the pattern's PRZ is between here and here, and I'll show you what that pattern looks like visually, so you can start to wrap your head around these advanced patterns. Okay, we go here, here to here, and then we go here to here, which would have ended somewhere around here. Okay, there's always value when you see a pattern respect its boundaries. Okay, what I mean by that is, okay, had price come to XA, A to B, and we had a huge tail here, and yeah, price did close within the qualifying area of what still qualifies as a valid pattern. Okay, I see that as a valid pattern, but I also see that as a slightly weakened pattern. It's not going to change how I trade it, but I do have to recognize that that pattern, okay, has been weakened due to the price action. But when you see a pattern that, it says you should not get past the 50% and close near that 50%, you see that pattern respects that. That is a very strong indication that this pattern is likely going to be respected in an efficient way. What I mean by that is that the trade's probably going to progress, efficiently in favor. Okay, not always the case. Doesn't change the way I trade it, but I do want to just mention that when price respects boundaries, and doesn't push past them where the other side has to come in to defend, tells you that there is more value there. There's more strength of signal in that area. Okay. It's not the reason why I took the entry here. I already explained why I took that entry. I already explained why I took this entry and why I didn't wait for the pattern completion, because I had a valid trade signal here that was in line with my area of interest in my trade plan. I would have added to my trade here because there is a harmonic pattern completion that's very symmetrical, has strength and value as the points are being respected, and fits the order flow. Okay. How would I have managed my trade a little differently? I would have gone to a break even at the pattern's profit target, okay, as I would have averaged in a way better price, giving myself enough room for the trade to progress, and also protected my trade from the profit target of the pattern reacting into a change of order flow. Okay, but that's not the case. That's not what happened. I ended up not having to enter another position here. Once price got to the break-even point, I did, and I got tagged out for 2 points by a couple of points to see price go in favor. Had this trade gone, had not been stopped out here, I would have achieved a full profit target or trailing, depending on how this would have worked out. But price did ultimately reach its profit target. So again, that's what happened today. Those were the facts of today's market. Those were the entries that I took. I missed an entry here because just price didn't come to me. Then I wasn't able to engage in any of these because there was no proper correction, no area of interest, and did not want to scale into a smaller order flow. It did not make sense for me to do that. Okay, and then once we got a proper correction, once I got price to react to the area, I engaged. Then I protected, got taken out, had another entry. Again, remember what we talked about yesterday? Some of you in the thread said, do I re-enter when I get taken out? Yes, I entered here. After I got taken out, I had a re-entry at a better price. I don't like to re-enter if I get a less favorable price, but if I get a more favorable price, that's even better risk reward. The conditions are still there. Even more conditions are present now. So therefore, I do want to take the trade even more so than before. All right. Is the trade weakened? Is the expectation weakened because we have a complex correction and we have price action making on a more shorter term a new structure low? Yes and no. It is definitely some breakdown, but is that breakdown offsetted by better risk reward? Yes. Does the risk reward justify taking the trade that may or may not be in a slightly weaker position because of that complex correction? I think the risk reward justifies the risk, and I would take that trade 100 out of 100% of the time. Why? Because it's an SOS3 signal and it's in my trade plan, and my trade plan says that that's the strongest signal. Okay, so that's why I took that entry, and I would have entered again here just on the sheer fact that we have an amazing opportunity to average in a better price, get even much better risk reward, and move towards where the market is intended to go. Okay, again, the most important thing here is not that we had two break evens and then we only ended up with 5 points when we could have ended up with however many points. That's not how we trade. That's not the purpose. Okay, when we take a step back and we look at these break evens, we have to tell ourselves, okay, did we enter on our trade plans rules? Yes, we did. Did we manage our trade on our trade plans rules, trade management rules? Yes, we did. Was I aligned with the strength of the market? Yes, I was. Did the market conform itself to its expectation and within reason to its harmonic values? The answer is yes, it did. So all is good, and we had a break-even day that in reality counts as 2 wins. Okay, but reality a break-even day. And the most important thing here is by trading this way, aligning yourself with the strength of the market, keeping risk reward on your side, and protecting your capital. It doesn't matter if you have 10 break evens and 1 loser, or 3 losers and 5 break evens. You have 1 or 2 winners. It's going to offset all of that. Remember, risk reward is very important. And keeping that risk reward profile on your side is going to help you not only get past days where, like this, where this could have been frustrating, but it wasn't at all. You know, let's say we would have had a losing trade, or a couple of losing trade here for small losses. It doesn't matter because of the risk reward, because we are aligning ourselves with the dynamic strength of the market through ratios, harmonics, and order flow expectation. Very powerful way to trade, very powerful way to put the odds in your favor and put you in a position where you are now competing at a level that's above the retail traders. Okay, very important aspects. Again, we're going to be diving very deep into harmonics, into ratios, into patterns. But I also don't want to overwhelm you in the beginning with so much information that your head explodes. Okay, we're gonna slowly ease into. I'm gonna expose these things to you visually, superficially in these post-session reviews, and I'm going to enhance these with lessons that are going to be detailed to some of the things that we're going to be covering and that I want to expose you to. Also, some of you may or may not be following the Forex Factory thread. There's a link to it on the channel in the top right hand corner. That's where I tend to post these on a more live way. I usually post my entry, and you can see the trade management as these trades progress. That is something that I do on that thread, and then at the end of the session I do this little video with the entries and exits. So if you want to see a more semi-live trade management, or what I do, or what I'm trading, you can subscribe and follow on the thread as well. Okay, live trading session, live stream will be next week, maybe on Wednesday again. I will iron that date down for you here soon, and post it on the channel. But please subscribe, because this allows others to find us, and I believe that this is going to be an amazing resource for everyone, and it's going to help people at the very least read a price chart with accuracy and make better trading decisions regardless of what trading system you use. My goal is not to get you to trade like me. My goal is to get you to read the chart with accuracy, but I also want to show you how I use that information and how I trade that information. As always, guys, thank you for the support. Thank you for the opportunity. Good luck and good trading.